Okay guys, so I hope you all found benefit from the first week's review that we released on Monday morning. We covered a few pairs. We covered US dollar CAD, pound Aussie, USD JPY and Aussie US dollar amongst others. A few of these moves have come through as well, so I hope you guys have managed to benefit. And the point of this video is really just to give you an overview and an insight of how we trade within the mentorship, what sort of setups we like to take. If you don't know already, we are more of a swing trading analysis point of view. We like to work our way into positions and try and take those big moves, those 120 pips, 150 pip moves to the downside. And US dollar CAD was a great example of our trading style and how we like to enter positions. So obviously we had this huge down leg over the latter part of 2018 before entering this corrective structure, trying to work our way back up to 13400. Now we were always bearish in this scenario. We were actually taking a few buys just in intraday positions up towards 1.34. We didn't quite make it, and then the price then broke back below the moving averages, which crossed over and broke back below this counter trend line, which told us that the bearish run was about to resume. So all we had to do was simply wait for a pullback to a decent area and looking to sell. Now, there's one thing, the price pulling back to an area. The second thing is making sure that that price is showing rejection of that area. And we had that here. We had the pullback. We're waiting for the pullback to retest the moving averages and the counter trend line. We had this, and we were then seeing multiple wicks to the upside. This told me that it was a good time to get in. A good chance that momentum was slowing down and that the bears were willing to come in again and take this thing lower. Obviously, we entered up around here, probably running about 120, 130 pips in profit right now after going to very minimal drawdown. Our first downside target was met, which was around the 1.3200 level. That was met last night, and we actually blasted through that off the back of the FOMC meeting, with the Fed Reserve not speaking too highly of the DXY. A bit of background into the US dollar, and President Trump has been speaking for quite a long time now about how a strong US dollar has been harming the economy in America, and that he has actually been campaigning for a weaker dollar. I don't know if you follow him on Twitter. He celebrates any days where the Dow Jones is down, and it looks now like the Fed Reserve Chairman Powell may be bowing to his under his pressure. And the speech he made last night was indicating that there wouldn't be many rate hikes in this year, which obviously affected the US dollar, and we did see a large sell-off on the US dollar, which obviously affected US dollar CAD, saw Aussie US dollar push up higher, and that's sort of a theme I think we are likely to see over the next couple of weeks at least. And I do expect US dollar CAD to come down to 1.3100 at least, maybe even lower. But we just have to wait and see and play it how it is. But well done for all those who got in here. That would be a nice 120 pips. And to be honest, if you're hitting 120 pips a week, that's more than enough, and you should be grateful for that amount. And then come back next week and try and do the same again. So pound Aussie as well, we spoke about. And what we had was that we saw last Friday's candle spiked up, touched the 1.8500 before pulling back down below the 0.786 fib level. So what we do here at Trading FX is we like to trade the deep pullbacks. So we like to wait for the price to pull back into something what you call the fib reversal zone before we look for weakness, before looking to sell and come all the way down. Now we also know that whether it's a reversal or whether it's just a retracement down, this area, the price always likes to react out of this fib reversal zone. So you can either take nice swing positions from this area, or you can look to take nice intraday positions. And I think that's what happened on GBP AUD. The setup was that we had drawn on to intraday support and resistance lines. So we had one here on the Monday low. So on the Monday morning we opened, we came down, we tried to break out lower, failed, tried to break out higher from this level here, failed, and then obviously the price just melted below. Now the setup was to wait for a breakout either way, whether it be to the upside, whether it be to the downside. Now we did favour the downside, mainly because what we could see is that we had this extended run to the upside. We created that new high above this point here, And statistically speaking, when you do create that new high, it's more than likely that we do enter some sort of retracement phase. So our targets were always going to be down this level, around the 1.800. It was just about, were we able to get into the position? Now, obviously, there would have been a speculative entries up here off this rejection at the upper intraday level. But since then, the price did break back below the moon averages, which are now crossed, also back below the intraday level there. And then the price just simply melted. There was a small setup that could potentially have happened on, I think this was Tuesday night. After we saw the price breakout, if we did manage to get a pullback to this area, I would have been interested to sell from there. We didn't quite get a deep enough pullback there, and the price has simply gone without us. Again, putting back up to retest the moving averages there could have presented us with another sell point. But right now, I think we just need to wait and be patient and wait for this next move. I do see 1.800 being hit, and then it's all about how the price wants to react in this level. So we could very much get something like that, where we can look for buys around this level, sort of around the 1.7900. Alternatively, if we were to see a daily candle close below this fib reversal zone and below this counter trend line, then that will signify to me that this new bearish leg is about to unfold, and that we could actually expect to see 1.6750 in the future. Now, that's obviously a long way off, and that is quite a speculative idea. We still need this counter trend line to break. We still need the moving averages to cross over. But right now, the rejection that we have seen out here, as well as the fact that we've seen rejection from this level in the past, is building up that confidence for that drop. Obviously, with Brexit around the corner, I think pound is likely to come under continued pressure. We have had a decent recovery over the last couple of months, but maybe it is time for it to come down. As you can see as well, this is the third drive to this counter trend line. Everything happens in three in the Forex market, so we should be vigilant and wait to see how the price reacts around the 1.800, 1.7900 level, and then act accordingly. Aussie US dollar as well was a nice successful move this week. The mentorship were recommended to try to look for longs or to take longs off the 0.71500 level. And what I do like to keep reiterating to the members is that any one candle can change your bias, whether that be on an intraday perspective or whether that be on a longer term swing perspective. And that's exactly what happened here. Before this large bullish engulfing candle that we saw on Friday, I was expecting the price to at least come down to 0.70500 before potentially breaking and come lower. But what actually happened was this. The price came down, kissed the 61.8 to the T before rebounding very high. This is a very violent reaction off this level, and we engulfed 4 days of previous price action. This candle also broke back above the moving averages. So as soon as this candle happened on the Friday, that gave me the indication that we could potentially be looking for longs towards the start of the week. Now, this isn't really a sign for a big reversal just yet. We can see that this fib here is more of a counter trend A, B, C, D corrective structure, and we actually are still playing out this larger term A, B, C, D play. So we are now back up into this region, and we should expect to see some weakness. So for all the guys who went long here, you're up about 110 pips. So at least move your stop loss to break even. Maybe even start thinking of taking a profit off the table, because until we get a daily candle close above 0.7300, we could still very much be in this bearish scenario here. It's just something to be wary of going forward. I do think we were going to hit 0.7300, which is sort of 30 odd pips away. So we could squeeze out 30 more pips in this trade. So that's Aussie US dollar going forward. It was a nice setup off the 0.7150. I think you can see it in a lot more detail on the lower time frame. So as soon as we broke back above the moving averages as well, moving averages were all crossed over to the upside. We came back down, we had wicks to the downside, wicks to the downside, and then bang, we had that explosion. So what we were telling people were to look to sell, to buy, off this level. And the reason why I was so happy to sort of promote this idea was the fact that we could enter this trade with a very, very tight stop loss. Trading is all about picking the right trades to take. It's not about how many trades you take. We want to be picking the highest probability trade setups, and usually the highest probability trade setups come from the trades where the risk to reward is almost too good to turn down. So what we could see here with Aussie US dollar was that our targets were up 150 pips away. However, our stop loss was sitting around 25 pips. So, the risk of 25 pips to make almost 120, 130, that is something that you should be jumping at all the time. And the members are eating nicely off that call. US dollar JPY as well. This is the one we were expecting to break to the downside. Our confirmation was the break was 109.15. Obviously that's happened. We snapped down lower again, caused by FOMC, and I think going forward, the motive should just be selling on any pullbacks. If we can pull back to 109.15, then that's great. That will give us a fantastic risk-reward trade. But even a pullback to the moving averages, considering how violent this breakout was, you can maybe think that the pullback's not going to be that deep. So a pullback to the moving averages could trigger us into position. We always like to keep our stops above the moving averages. So you're looking at a 40 pip stop for maybe a 100 pip gain. So again, a very nice risk to reward, 2.72. And those are the sort of trades we like to pick out just because of we're risking the less for the most rewards, which in turn gives us the highest probability setups. So again, we've had some nice movement this week, some nice pips were caught. It's important now just to sit on our hands, wait for those pullbacks before looking to re-enter the markets.